Okay guys, let's do Lucky Liquors. That's something from the very far distant past out of our lives, where we actually had a large liquor store with a year end of 31 May 2015. It is owned by Mr. D.S. Norman. Mr. Norman is a very good businessman who has made his store very successful. He owns the building from which he operates, and he does both his sales as well as his admin tasks relating to the business from his building. Lucky Liquors make use of two accounting systems. The first system, the ABC accounting, is the most important as all sales and purchases of inventory move through the system for accounting purposes. However, as this system is not properly equipped with the other accounting cycle entries like salaries and wages and creditors, etc., Lucky Liquors make use of a secondary accounting system called Color ACC. At the end of every month, the totals of all transactions relating to the inventory, purchases and sales are captured into the Color ACC system by hand. All other transactions, including the receipt of payments from debtors and the payment of creditors, are generated independently via the Color ACC system. On 15 May 2015, a storm ripped through the town and caused a lot of damage to many houses and businesses. Lucky Liquors was among these businesses that were damaged. Luckily, no stock was damaged. However, upon further inspection of the building, Mr. Norman noticed that the storm tore open a part of the roof above the admin portion of the building, causing a severe water leak. The water leak damaged the accounting system server, which serves as a backup of the accounting information. The computer used for accounting purposes containing all the accounting data was also damaged by the water. An IT expert was contracted in and managed to completely restore the Color ACC system up to 30 April 2015. However, the ABC's accounting system was not recoverable at all. As Lucky Liquors approached its year end and its VAT payment cycle, Mr. Norman contacted you to be of assistance in the process of recreating some of the missing accounting information. Upon arrival on the premises, you were provided with the following information. Now, before we get to the information, let's see what we have to do. Prepare and properly close off the general ledger accounts listed below for the month ended 31 May 2015. The VAT control account, the debtors control account, the inventory control account, and the creditors control account and bank. So when we start off with this question, let's open up all the T accounts, and as we go along, we can then start completing the information in these different accounts which they require from us. Right. Extract from the restored trial balance for the period 1 June 2014 to 30 April 2015. So they restored the system up to 30 April 2015, so therefore it must be our opening balances. Inventory 45,000, debtors 29,000. So if we go to inventory, these are debtors, opening balance 29,000, inventory opening balance 45,000. Bank opening balance 162,224. They also want us to do the bank account. So our bank account, opening balance 162,224. Creditors 7,900, VAT payable 3,000. So VAT payable opening balance 3,000 and creditors opening balance 7,900. Guys, if you don't know your debits and credits, you're really going to battle to do incomplete records because you're going to get everything wrong. Then sales and cost of sales is not required, and I'm not going to do that. Extract from the list of transactions for the month ended 31 May 2015. So the period that we have to reconstruct is only from the 1st of May up to the end of May. Only 1 month's worth of accounting data. Now, let's start with that. Salaries and wages amount paid, 35,000 Rand. So in our bank account on the credit side, we will have salaries and wages, 35,000 Rand. There's no VAT implication of salaries and wages, so that is the beginning and the end of the story. We don't have to do the expense accounts. Then electricity amount paid, 1539. So in our bank account on the credit side, 1539. Electricity, though, has a VAT implication, so we also have to update our VAT control account. So on our electricity paid, 1539 divided by 1.14 times 14% give us a VAT input that we can claim of 189 Rand. Telephone and internet, the amount paid, 912 Rand. So out of our bank account, we're going to pay the telephone and internet 912 Rand, and there's also a VAT implication there. So we're going to claim the VAT on that. 912 divided by 114 times 14 gives us VAT input that we can claim of 112 Rand. Credit losses from the credit loss account. Now the credit loss account is the expense account. So that means in the expense account we've written off 1150, but in our debtors account, the amount that we're going to write off is not 1150, it's going to be 1150 times 1.14, because in the creditors account or in the credit losses account, it is only the VAT exclusive amount. So in the debtors control account, we have to add the VAT back in order to give us the total amount of 1311. Okay, additional information. Upon discussion with the sales personnel and the records clerk, it was established that all supporting documents relating to sales and purchases for May 2015, this month that we have to reconstruct, were available in the storeroom. So we have the source documents, and then from the source documents, we can really now determine what entries we should have passed. The titles of these supporting documents are as follows. Cash sales, 44,150. Now that's the total of the supporting documents. So therefore it's the VAT inclusive amounts. I want to do that. Cash sales, 54,150. So in our bank account, we have received the total amount of 54,150. I'm going to do the VAT. I can do the VAT one by one as well. 54,150 divided by 1.14 times 14%, and that will give us 6650. The next one is credit card sales. Now, credit card sales, as I've explained before in another video, is being paid into your bank account on a daily basis. So it also flows through the normal bank account. So 23,940 on the debit side of the bank account. And then in our sales account, obviously, is going to be the VAT exclusive amount, which is 23,940 divided by 1.14 multiplied by 14%, which is the VAT that we're going to pay over on that, equals 2,940. And then credit sales of 15,960. So in our debtors account, we're going to debit our debtors account with 15,960. The counter leg will be the sales, which is the VAT exclusive amount, and then the VAT on the credit sales would be the 15,960 divided by 114 times 14, and that gives us 1960. If you go back here, we would see that our total sales, if I add the 54,150, the 23,940, and the 15,960 together, that gives us a total of 94,050. So the VAT there, if I only have done that once, I could have said 94,050 divided by 1.14 times 0.14 equals a total of 11,550. If I go back to my VAT control account, you will see that if I add all those little figures together, the total there is again the 11,550. Good. Now, cost of sales, guys. I have my total sales figure now. What is my total sales figure? Total sales figure is divided 94,050 divided by 1.14, and that equals a VAT exclusive amount of 82,500. 82,500. If I take my 82,500 and I apply then my profit formula, 82,500 multiplied by, let's have a look, what was our profit formula for this period. Lucky Liquors adds a markup of 32% to its cost of sales, or the cost price of goods sold, in order to determine the selling price. So that means if we want to write down our cost formula, we add 32% to the cost price in order to determine the selling price. So going back here, if our total sales was 82,500 and we want to work back cost of sales, 82,500 multiplied by 100 divided by 132, that would have given us cost of sales of 62,500. So we can go and plot that in our inventory account. On the credit side of our inventory account, the total cost of sales, there's inventory cost of sales, 62,500 Rand. Right. Then we had credit purchases of 69.86. So in our creditors account, we would have recorded 69.86. The debit side, the VAT exclusive part, would have gone to our inventory account. So 69.86 divided by 1.14 will give us total inventory, credit inventory purchased of 14,900. And in our VAT control account, the 14,900, which is that one there, multiplied by 14% will give us total VAT input that we can claim of 2086. Then cash purchases was 25,422. So in our bank account, we would have had cash purchases inventory 25,422. The VAT exclusive amount would have gone to our inventory account. So it's 25,422 divided by 1.14, 22,300 would be debited against our inventory, and then the VAT on that would have been 3,122, and that would have been debited against our VAT control account. Right, they tell us here all amounts include VAT. I did not need to tell you that because you use supporting documents, and supporting documents will always include VAT. Then they say 2 of the invoices for cash purchases were extremely faded due to some water damage and have not been included in the above total. So this is a nice way of telling you, look, your inventory account is not 100% correct. Why not? There's some cash purchases. So what is the counter leg of that? Bank, and obviously VAT. Okay, so remember that somewhere along the line we will have to work out as a balancing figure what the cash purchase, the value of these invoices, cash purchase invoices were, in order to update our records completely. And then that will affect our inventory account, our bank account, and our VAT account. The bank statement for May 2015 shows a closing balance of 150,000 Rand. Credit, so it will be a debit in our books, you agree. As at 31 May, on the same date, the owner withdrew 5,600 Rand. The amount does not yet appear on the bank statement. So it means that he has withdrawn 5,600 Rand, which we have to put in our bank account. That was withdrawals, 5,600 Rand against drawings. And it also means that what would the balance according to our bank account have been if the bank statement balance was 150,000? We were in agreement with all the entries that went through on the bank statement except this 5,600 Rand. So therefore, our accounting balance would have been 150,000 less the 5,600, which would have given us a closing balance of 144,400 Rand. So in our bank account, we can also put in our closing balance, 144,400, the difference between the two. Right, according to the bank statements, the total amount received from debtors during the year amounted to 25,700. Look at those words, for the year. What are we busy with? We are busy with the month of May. The largest portion of this amount was received during the period 1 June to 30 April 2015, and that amount amounted to 23,500. Now, What do we want to record now? We only want to record now the transactions of May because that is the only missing transactions. Everything up to the 30th of April we could have recovered out of our system. So in the current month, what was the total amount that we have received? It would have been the 25,700 less the 23,500. Equals the total amount of 2,200. So in our bank account, we would have shown this receipt of 2,200 Rand. In our debtors account, we would have shown bank 2,200 Rand. A summary of the supplier statements as at 31 May 2015, i.e. creditor statements, indicated that Lucky Liquors owe their suppliers 19,800 Rand. There were no discrepancies between the supplier statements and the creditor's ledger as far as the creditor's clerk could remember. So therefore the closing balance of our creditor's control account would have been 19,800. Creditors closing balance 19,800. A total of 1,086 was allowed as a settlement discount for the month of May. So therefore in our creditors account we have to acknowledge that settlement discount received of 1,086. Now you know that when we receive a settlement discount, we have to pay VAT to the receiver of revenue. So in our VAT control account, discount received was 1,086. If we work out the VAT on that discount, it gives us a total of 133 Rand. And we can actually put that in the VAT output section of the control account. The next one we've already done, so we don't have to worry about that. Lucky Liquors does not have an allowance for credit losses. And then the last one, an amount of 7,301 was paid in full settlement of the VAT payable account, including a fine that was charged by SARS. So that 7,301 was not only the outstanding balance. SARS has levied a fine because they were paid, the fine was due to an error on the VAT return submitted on 28 March. This payment was made on 31 May and is reflected on the bank statement. So it has already been paid. So we have to update our bank account. And over and above that, they don't tell us what the fine is. So by implication, they say here that when you're going to balance off your VAT control account, there should be a balancing figure in the VAT control account. And that balancing figure will be the fine that we have paid. So let's record the 7,301 in the meantime. We're going to credit our bank account with the amount of 7,301 and we're going to debit our VAT control account with the amount of 7,301. Now let's start here with our debtors account. We have everything here, so we can just work out the closing balance as the question asks us to do. If we look inventory, we know inventory we have a potential problem because some of these invoices that we've said was faded. Some of the cash purchases, those invoices was faded. So the inventory account we know is not 100% up to date. We need something on the debit side and then obviously we need something on the credit side. So the cost of sales we've already calculated and we've already recorded the cost of sales of 62,500. Remember here, cost of sales 62,500, which we have already worked out and recorded in the inventory account. Good. Then we say, right, if we now going to balance off the inventory account, we don't know what the closing balance is, so we have to wait a little bit there. Let's have a look at our creditors account. We have our opening balance, we have credit purchases, we have the allowance, we have a closing balance. So the only thing that we haven't recorded in the creditors account must be the payments that we made to creditors. And we also received a settlement discount this month, so obviously there was a payment that we've made. So when we balance off the creditors account, this debit entry that we didn't know of can only be one thing, and that is the amounts paid to our creditors for the month. So therefore, we're going to put in 4,000 Rand for bank, and in our bank account, we're going to have creditors 4,000 Rand. And that is the amount that we have actually paid our creditors for the month. Now, if we go to our bank account now, we say, well, we have the closing balance. Now, if we're going to close off our bank account, we have now everything in our bank account that we know of. So therefore, we know that if we're going to have a balancing figure that we need on the credit side of our bank account, that will equal the value of the cash purchases that we didn't know, that was faded due to some water damage, that we didn't know what was the total amount of. So therefore, in our bank account, when we're actually going to balance it off, the balancing figure of 18,340 can only be the amount that we've paid for those inventory items. Now that we have the amount, we can take the VAT exclusive amount to our inventory account. So there we're going to complete that picture of the inventory account. 18,340 divided by 1.14 is going to be 16,088. The VAT then, it's the 16,088 times 14% that we are going to put into our VAT control account, 2252. Then our VAT control account is also complete. If we're now going to balance off our VAT control account, you will see that we're going to need on the credit side 540 Rand. And that 540 Rand is going to be representative of the fine that SARS has levied on us and that we have to pay. So now we can complete our VAT control account as well. So the VAT control account is done, the debtors control account is done. The inventory account, we can now balance off and determine the closing balance of inventory. So then that is done. Creditors we've done because the closing balance, the balancing figure was the amounts paid to creditors for the month. So that is done. That we've done. Our bank account is done. So now we're done with this question.